Good morning, traders. It's the 30th of March. We're Signal Centre Talking Bull. I'm Joe, joined by Steve. Good morning, Steve.
Morning, mate. All right.
Yeah, good, thanks. How are you?
Yeah, not too bad. Yeah, not too bad.
Excellent.
Great.
Okay, let's get into it. So headlines, let's do those first, then we'll get into some charts. So over the past 24 hours, we've seen risk appetite recover further. There was a further easing in concerns surrounding the banking sector on Wednesday. Risk assets were generally in demand, and we saw a dip in demand for yen. Equities posted gains pretty much across the board. Markets will be wary, however, over position adjustment ahead of the end of the month and the end of the quarter. The dollar also fought back yesterday, although remained under some pressure against European currencies as risk appetite recovered on Wednesday. The US currency fought back on corporate month-end dollar buying demand and posted significant gains against the yen and other commodity currencies. In terms of the energy sector, we saw the latest US EIA inventory data recorded a 7.5 million barrel draw for the week compared with expectations of a marginal build, so that's pretty substantial. Although the API had already reported a substantial draw in the previous session, gasoline also recorded a 2.9 million barrel draw. In terms of the Bank of England, we had another policy committee member yesterday speaking. This was Mann this time. Stated it would be difficult for central banks to set monetary policy during the second half of the year, as they are likely to face a sharp decline in headline inflation, but sticky core inflation is likely to remain. This will also increase the pressure for banks to cut rates, but they want to see inflation squashed before doing so. We've got latest inflation data from Germany today. The headline rate is expected to see a sharp decline to 7.3% from 8.7% due to favourable base effect. So we'll wait and see what happens there. That's out at 1 o'clock UK time. And also this week, we've got the latest PMI data due from China. That will be very important for expectations surrounding the Chinese and global outlook. Expectations are for solid expansion, but slightly weaker data than last month. Okay, let's get into some charts, Steve. Let's have a look at cryptos to start. What's happening there?
Yeah, I'll share my screen, mate, and we'll get into that. Cryptocurrencies. We're looking at Bitcoin. Had another spike up yesterday, actually. So let's take a look at the daily chart. Remember where we are and dive into it. So we've got this band of. Might have been better to look at the weekly chart, but we got this band of support, previous support, now resistance, going all the way back to 2020. Well, the end of 2020, start of 21. That's when prices broke up through that 28,000 level. And this 28,000 level acted as support on multiple occasions. Eventually, we broke down through it, retested it. So that gives us like a higher level around about the 32,000 as a resistance point. And now we are here. We're retesting this. We'll call it a pivotal band for Bitcoin, because it's as big as that. And we're trying, or we've sort of like nudged into it over the past couple of weeks. And yesterday we saw another spike into it. We can see on the 4-hour chart that we spiked up. Didn't stay up there for long, couple of hours, and reversed lower. That formed a shooting star candle. However, we haven't had a shooting star formation, which would be a follow through to the downside. So it's held up pretty nicely, but I'd be a little bit concerned about it if we did get a break of the 28,146 level. That could open up that C-leg correction, which is what we're looking for. We've had an impulsive move higher, 5 waves. Then we have an ABC correction normally in markets and on our charts, and we've had the A looking for the B leg, which could have been the high yesterday, overnight this morning, and then looking for that C leg correction lower. So mind you, if we do manage to sort of push above that sort of 29,200 to 29,320, then we are mixing it with the big boys and in with the real sort of like strong resistance levels all the way up to 32,000. So definitely one to watch, and nothing would surprise me in Bitcoin as it has done. Nothing has surprised me up until now anyway. I'm just surprised we're so high. Ethereum is the level to watch here is 1730. We're above that at the moment, We are looking a little bit toppy, but it looks like we could have completed that ABC correction in Ethereum. That moved down to 1688, played out the typical correction, the typical Fibonacci retracements that we expect from an ABC correction. So we are now free to really see where we're going next. We do have every time we spike up towards this 1850 level, we get rejected very quickly. Really need to prove the sort of like worth of the bulls by staying above that 1850 level, breaking above it, staying above it, and closing above it on a significant basis, maybe a daily, maybe a weekly chart. So plenty to watch there. XRP remains kind of bullish. It seems to be performing a bit better. We look at on the daily chart. We've broken above the downward trending resistance line aggressively, nice impulsive move higher, and we've topped out around about 58.50. That's cents, not dollars. So, but according to TikTok and YouTube, we're going a lot higher than this. We're going to the thousands of dollars, but I can't see that at all. So here we are. We managed to top out, and on a daily basis, we formed again. I formed a little bit of a shooting star type candle. So be a little bit concerned about maybe the momentum stalling. Maybe we're running out of steam here, and potential for a correction to the downside. But I'm not going to stand in the way of it. On the 4-hour chart, it looks like we're looking for that impulsive move. We've had the third leg, looking for that fourth wave correction. Could we have formed it there? Then looking for that fifth leg extension, potentially up to anywhere between 60 and 73 cents. So that's definitely one to watch. I'm more bullish on XRP than I am on the other two that we just covered. Taking a look at commodities, look at gold. We've been I've been watching gold quite closely over the last few weeks. It's provided a few nice opportunities, especially within this range of 1935 all the way up to the 2010 level, where we've seen prices trading between. We're now getting this almost triangle formation. There we go. There's the top. There's the bottom. So normally when we get these sort of formations after a impulsive move higher, we normally get a continuation. However, not all the time. So, and also something I find with these type of triangle formations is that normally the first break is a false break. You see it so often that you'll see prices break to the downside, everyone gets excited thinking we've given up, we failed, and then you get the push higher, or the opposite, you get the break to the top side and it just forms a little bit of a higher high and then collapses to the downside. Currently at the moment I'm more bullish than bearish on gold. Dollar remains under that pressure. It still sort of can't seem to get out of the quagmire of this like 102.50 area on the dollar index. So I'm looking at the moment for the I'm looking more at these higher lows and really looking for maybe a retest of them lower highs before we sort of really get the trend. So I am slightly more bullish on gold, XAU, USD, and looking at the Fibonacci charts, it's not sort of like lining up with my idea, mind you. I don't really like this Elliott wave theory, or this Elliott wave that's been put onto these charts. I quite like this the orange one, but the blue one, the bigger trend doesn't really sort of like line up with what I think, but it's very objective, so, or subjective, so really take it with a pinch of salt. It's nice when things line up together. So silver, that's pushed higher. That's making a nice high at the moment, the highest levels we've seen since early February. And again, looking for that fifth wave before we get a little bit of a correction there. Resistance on the upside, we are at resistance, and anywhere now up to 24.60. So another dollar to the upside. Crude oil has had a really nice impulsive move higher this week, and it looks like there's nothing really slowing it down. We had oil inventories out yesterday, and we saw a pullback in prices, but we have stalled at a support level, which we've seen previously on Monday, and we've looking to project higher. We've formed a nice bullish outside candle, which has engulfed the previous 2 4-hour candles. So on the short-term chart, that's still looking quite nice on crude oil. If we do manage to get a break back down below support, probably coming in anywhere between 72.20 and 73.20, then we could give up those gains, and it may negate this this Elliott wave pattern. Natural gas is hanging around like a bad smell. We got back down to that 210 level, so we've retested that low that we saw in on the 22nd of February. So that's quite nice, and it's rejected that quite nicely as well. Nice little, well, big bullish engulfing candle which formed after it yesterday. I think we have natural gas inventories out today, so we should get a little bit more from there. It's still managed, the price action got up to 223, but then it's back under pressure again. It's back at that 210 level. It's really gnawing away at it. And overall, this still looks like a very bearish chart on the daily and the weekly. So yeah, maybe more. The bulls have a bit more work to do on this, I think, Joe. But let's take a look at the indices after Joe takes a look at the FX, unless there's been any requests for commodities or cryptos.
No, all good at the moment, Steve. Just a few FX requests, which we will get to. But we'll start off with the dollar index first of all. So in the commentary, we mentioned that there was some dollar strength yesterday, and it was only mild. If we're quite honest, we can see that the candle was within the body of the previous day's session, which was pretty bearish. We've also still got this gap which remains unfilled at 102.83. So we still haven't filled that gap just yet. That still could present opportunities for the bears to step back in, sell into the gap and target lower prices. Overall, the trend remains bearish on the dollar. Potential that we are forming some sort of bottom. Maybe it's highly speculative at this point, and while we've got this unfilled gap, I still think there is a risk to the downside with the US dollar. But we are approaching month end, and that may mean that there is some interest or some demand for the US dollar between now and the end of the quarter, which of course is tomorrow. So let's take a look at some of the other markets linked to the US dollar. We can see Euro US dollar here, very undecided yesterday, posting a doji candle. And today, pretty undecided yet again. We do have resistance here at 108.85. And while that continues to prevent prices from moving to the upside, as it has on these two occasions here, as well as this 78.6% fib level, there is still potential for lower prices. So pretty choppy stuff. I have speculated that maybe we are in the process of forming a top here on Euro US dollar. Still needs still got plenty to do before we can even get close to thinking that this is going to complete. But while we've got these highs in place here and they remain unbroken, there is potential maybe for a slide lower towards support at 105.31. But of course, that would mean that we need to see some dollar strength, which there really aren't that many indicators to suggest that we're going to get that at the moment. But month-end factors could play a part. Let's take a look at some of the requests then that have come in. So there's been requests to look at some sterling pairs, yen and dollar. So we can see here, this is sterling dollar or cable. We can see we've got these major highs here, which have been highlighted by these arrows. So this is major resistance here at 124.47. We then saw prices move lower, potentially completing a double top before reversing quite sharply, then completing some sort of wedge pattern, which we saw a pretty substantial breakout from, and prices continue to grind higher. Yesterday, we posted some losses. Today, we're taking those back and engulfing the body of yesterday's session. So looks to be very much on the front foot, and I would not rule out a retest of these previous highs that we posted between kind of 124.30 to 124.47. So that's looking pretty strong, pretty robust at the moment. If that dollar buying does come in, then it could have an impact here and potentially drag prices lower. But at the moment, looking at the daily charts in isolation, the dollar is heading lower from on a trend basis, and this looks to be heading higher in the short term as well. If we take a look at sterling yen, this has been an interesting one that we've been following now for a while, because we could see that prices have been trapped by this downtrend line for a significant period of time, dating back to October last year. We can see there was a number of attempts at trying to break through this downtrend, a number of large wicks that pushed through but ultimately failed. But yesterday we actually saw a closing break above this downtrend line. which could be quite significant. Obviously, we have seen some fairly substantial losses on yen currencies, and therefore this is really boosting sterling, and that looks pretty good as well on a standalone basis. So, really nice break to the upside yesterday. From a technical perspective, we would maybe look to buy on a pullback to retest that broken trend line, but it's not a clear level. I don't tend to like following sort of downward sloping or upward sloping levels for support or resistance. I always prefer horizontal levels. So maybe a pullback towards 161.77 would provide an excellent opportunity to go long here in anticipation of higher prices now that we've got the break of this trend. So all in all, looking pretty strong and pretty robust on that front. Let's take a look at some of the euro markets now. As they've been requested, and then I'll take a look at Aussie yen as that's been requested also. So let's take a look at Euro CAD. So this is the daily chart. We can see here that the trend is very, very strong indeed. Going back to August last year, we can see we've been in a really nice sequence of higher highs and higher lows. We broke through significant resistance here, as highlighted by these horizontal blue levels between 146.34 to 146.64, and prices extended higher, reaching a swing high of 149.38. Now, having reached that level, if we look back to the left-hand side, is there any major resistance? Not really. So this just seems to be some sort of corrective pullback. And what Lompra suggested on the TradingView chat is that this was getting close to a 50% pullback level. And I can see that here in yellow. This is on the daily chart from this swing low in February to these highs that we posted earlier this month. So we're pulling back into these previous resistance levels. So that's the first kind of sign that maybe we could be interested in taking some fresh longs. We've got the upward sloping trend line and the 50% fib level all in a kind of cluster around this area here. So maybe targeting some fresh longs into that zone would be a
Also got
pretty
that
good.
then previous swing high, Joe, as well, which will now was
Yeah,
resistance, should
these
act
ones
as
here. Yeah.
support. Yeah.
Exactly. So there seems to be multiple reasons on this to want to continue playing the upward trend for the time being. Let's take a look and see if there's any Elliott wave counts that can help us out here on the daily. So according to this, and this is, as we know, a subjective tool, we've got one count here that suggests on the daily that we've actually completed 5 ways higher, and we're now actually in the ABC corrective leg. So the A leg, I'm guessing, is going to find support somewhere around here, and then potential for us to play a bit of a bounce on the B leg. Obviously, if it goes on to break the highs of 149.38, it would invalidate this count that we have on the chart. And I wouldn't bet against that, to be honest, given how strong the trend has been of late. So looks pretty good there on Euro CAD. If we take a look at Euro Yen, this is another sort of market that's quite interesting. If we go back to what we just looked at on sterling yen, we know that there was a break of that trend, but we haven't seen that yet on euro yen. Despite seeing some really impressive up days, we do have a series of lower highs here that are still in play. So I've highlighted this line here at 144.96, which is this high that we posted on the 15th of March. And if we can break above that level there, we're going to simultaneously take out that downtrend at the same time. And if we can do that, then that could trigger further gains to the upside. We know we're seeing yen weakness, euro's holding up quite well. If we look at the sort of longer term picture here, we can see that clearly there is a decent uptrend in place. So maybe this is just kind of a consolidation before we end up seeing a continuation higher in price. So I think all in all, you could argue it looks quite bullish. If you want further confirmation, then you probably want to see prices take out that 144.96 level and invalidate this short-term sequence of lower highs. Let's take a look at Aussie yen. Let's just clear these drawings up just to make it a little bit easier for us to see. So we can see here that we formed a head and shoulders top. We then saw this corrective channel. We then broke down through that and went on to make new lows, touching this support line we had here at 86.25, which is a previous high from back here in October. So a nice area of support, seemed to attract fresh buying interest, and now we've seen a pretty substantial move to the upside. So that all looks pretty strong indeed. In the short term, you could argue that we've seen a bit of a break of a wedge maybe, which again is suggesting potentially higher prices in the short term. So that looks quite good. for a short-term correction from here. In terms of upside targets, potentially looking to target the reverse side of this broken channel or these previous swing lows in here around 91.29. So that's looking pretty strong, obviously being aided by yen weakness at the moment, and seems to be no signs of that slowing. So looking pretty good on the daily chart. I did have a look at this on the intraday charts as well, actually, because it was an interesting level that looked quite good to me. Purely on a speculative basis, we can see we've had a very substantial rally here. I highlighted some bespoke resistance here at 88.81, which at the moment seems to be preventing prices from moving higher. We actually posted a bit of a shooting star candle in the previous hour as well. So yeah, potential for some two-way price action there, potentially a short-term selling opportunity in order to then maybe buy it a little bit lower following the break of this wedge to target a move up to 91.29. So hopefully that was useful, guys. Let's move it on to indices now. Steve, you can wrap us up on the charts.
Yeah, no worries at all. Let's take a look, as we normally do, start with FTSE. Looking at the daily chart, we can see that we've been pretty constructive this week so far. We are at quite a decent resistance level here, which we can draw on. Yeah, maybe more of a, if you think about a channel, we've probably got the top around about 8,050, the low around about 7,300 level, which we've reacted from a number of occasions, even back on December last year. And yeah, we seem to be retesting that midpoint. So looking at 7,600 to really be tested today. And let's see how, I mean, the momentum into it is pretty strong. So should sort of like offer some good opportunity. And looking at the 4-hour chart, we have broken through that 4-hour Ichimoku cloud, and really sort of like now we've got that decent support all the way down towards the 74.20 levels. So yeah, looking quite nice. Next resistance probably around about the 76.45 area. That would be from the previous swing highs. So look out for that. Good price action in DAX, also a nice upward trending support line that we can see on this 4-hour chart, and support for that from that coming in around about the 15,150 level, but trading nicely above the previous highs that we had from 22nd of March, and approaching that resistance level up above. So really looking to see what it does around about here, which is above the 15,600 level, 15,675 that comes in at that resistance. Really sort of like quite open, and we can see on the daily chart, I've removed a lot of the drawings here. This proved quite a decent resistance level around about the 15,700, and we had 3 tops here and formed a double top formation, which extended lower and really sort of like hit the measure move target on that as well. So the work's cut out up at these levels. We'll put a nice big red band up there. That's the sort of like where we're going to really find some decent resistance. In between there, where we are now, and there, you know, we will still see some selling pressures come into the market intermittently, but yeah, feels like it's got a bit of freedom to push higher on that. On the down, we've broken above that resistance level from the 22nd of March. That was 32,776, and we're trading above it right now. So there's plenty of room on the upside as well. Next line of resistance, probably all the way up here at the 33,450 level and above. So again, broken up through it, and blue skies, new highs. Wow. And NASDAQ is still testing that major level of resistance that we've had all the way up at around about the 13,000 level. We're not far away from that, 115 points below it at the moment. And we've formed a really nice bullish engulfing candle after the bullish hammer that was formed on Tuesday. So looks good for the upside on NASDAQ. This rally that we've seen in the indices has they've really taken advantage of it this week, and it continues to look okay. The bullish channel that we've seen in the S&Ps, again, we mentioned this on the 24th of March with this bullish hammer reacting from this this upward trending support and this channel that we said we were in, and that has paid dividends also. Moving up now towards that resistance level around about the 4,050 to 4,075 level. However, one chart I did want to sort of highlight was the S&P weekly chart, and this is the bearish channel that we are in on the weekly chart. This is the higher time frame, so this is really where what we're driven by, and we still have work to do. We still have the resistance from this channel coming in around about the 4,100 level, and then more resistance faced just below 4,200. So plenty of work to do for the bulls, but opportunity there if they manage to grab it. That's about it, Joe.
Nice. Thank you very much, Steve. Okay, let's take a look at the gun to the head trades then. So this is where Steve and I pick trade ideas live on the stream, as if we had a gun to our head. Just a couple of rules we need to follow. Obviously, stops and targets are a necessity. Also need to make sure we have risk-reward ratios of better than 2 to 1. We're trading these on a live account, and we're posting them up to our TradingView profile. So if anybody wants to check them out, please feel free to do so. We risk 1% of trading capital per trade. And yesterday we can see we had a couple of trade ideas. I was selling CAD Swiss franc. Looks as though it was stalling into a 78.6% fib level in the short term, as we can highlight there in blue. And if I click the play button, we can see that it didn't work out. Sadly, it reached the stop loss around 2 o'clock in the afternoon. So there was no follow through to the downside there, although that 78.6% fib level does still appear to be doing a job. Steve was looking for a rally in gold yesterday, and you were actually on side, I believe, at 9 o'clock. So yeah, sort of had a decent move towards the target, but then had a pullback towards the close. I think you were 0.27R on side, something like that. 0.24R
Okay.
on side.
I suppose I've
And
got to
it did
take it,
actually
man.
go and reach that stop overnight, but you were done and dusted by that point, Steve, and
Yeah,
profit secured.
I didn't hang about for that stop to get hit, mate. Not
No,
me.
no,
Way
no.
too clever for that.
Okay, so we've got to pick some new trades today. I've got one that I quite fancy, and it's actually as a result of one of the requests that we had in from Lompro, and he was looking at Euro CAD. And if we go back to the daily chart, just to refresh our memory on this, we can see that all in all, the trend is very positive on the daily. Nice pullback into a cluster of what was previous resistance and hopefully now support. So we've got trend support, we've got a 50% fib level, and we've got some previous resistance levels, which now should provide some support. So looking to time this, on an intraday basis, we can see this move higher here has pulled back close towards a 61.8% fib level, and potentially into some support there as well, posting what may be a bullish hammer candle. Still got 28 minutes left to confirm that, but I don't have time to mess around. We've got to get this on. So I'm going to buy it at the current levels if possible, Steve. Now we got to find a target. So I'm going to target a move to there, which is 147.94. And that means I've got to get stop a reasonable point to give me that risk reward ratio. So I'm going to go with the stop at 146.34.
Okay, about 2 to 1 risk reward, is it?
About 2 to 1, yeah.
It's 1.9 at the moment, Joe.
Right, tighten the stop.
Not move
Let's raise
move
the
the
target.
target.
Yeah.
Raise the target. Yes, more like it.
148.05.
Yeah, got that on. There you go.
Good.
Only
There we
cost
go.
you like 60p to get in, so that's all right.
Did it really?
Mhm.
Wider stops, wider spreads on that one. Anyway, it was on. We can see that on Steve's screen there. We are slightly offside, as you would expect when you first place a trade, but hopefully that will now run towards that target. So thank you, Lompro, for the inspiration there. We've got the trade on. Let's see how it goes. Over to you, Steve.
You know what? I'm going to go with gold again. From yesterday, it was. I feel quite. It's come down. It took out that level. I mean, I was just trying to get the trade on. It's difficult with a small account size of 2,000 to try and trade gold because you can't trade fractions of it. You have to trade like the 1 unit or the 2 units. So it's difficult to get it on. So I'm going to go for it again. but probably have a bigger target to sort of like allow me to have that stop in the right place, because it ended up we didn't risk enough yesterday. So I'll try and make up for that today. Risk everything. I mean, just risk 1%. Like, let's get this 1% on here. That's the risk. In £19.25, the count's got £1,925 in it. So we want the stop to be really, we could have the stop a little bit higher. We've had a nice little bit of reversal. We did get down to 1955. If we put the stop at 1955 again, we're only taking 1 unit. So let's get that up a bit higher, and also I'm going to go for the big one, Joe. Well, I've got to go for a big target anyway, 1995. You can see I'm risking £18.60, which is close to that 1%, targeting a move higher. No, I'll stick to my guns on that. 2.38, that's quite close to my average. So we've got 2 units on, risking 1%. As you can see, risking £18.57, just below that 1%, and targeting a move all the way up to just below the 2000 level. So we're going again in gold.
For gold. Good luck, Steve.
Go for gold, yes.
Okay, day ahead. Let's have a quick look at what we can expect from today. So 1 o'clock, as already mentioned, we've got this German consumer prices. So latest read on inflation. The headline rate is set to decline sharply to 7.3% from 8.7%. So that would be a pretty substantial move. And again, further indication that inflation has potentially peaked and we're on the way down, which is good. And the US jobless claims are also due out at 1:30. So keep an eye out for those. They could be market moving. And then tomorrow we focus on the Chinese PMI data. And we've also got Eurozone inflation and another inflation metric in the US as well from the PCE prices index. So that is it from Steve and I. We're off to London today. So hope everybody else has a great day ahead, and trade safe out there, everybody.
Yes. Cheers, everyone.
Thank you. Bye-bye.